Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 16, 2022. Let's take a look at most beaten down profitable growth companies. At this time, Wall Street does not have patience for the money losing companies. That's why we are looking at most profitable companies which are beaten down at this time. So we will look at volume, more than 1 million shares traded. So these are very liquid stocks. So we don't need to worry too much about liquidity here. And from a growth perspective, these are positive sales growth companies and net margin positive companies. This tells you these companies are growing and also these are profitable, not money losing business. And quick ratio is more than one. That tells you these companies have got enough money to take care of their short term financial obligations. Financially, they're good, no need to worry there. Altman Z score, which is the industry standard for companies' financial strength, is more than 2. That tells you these companies have got enough money, not candidate for bankruptcy at all, very solid fundamentally. And these are beaten down stocks with a relative strength index less than 45. That tells you from an entry point perspective, it's a good time to buy some of these beaten down stocks here. And free cash flow is positive. That tells you these companies are generating money and they have got enough free cash flow. So that's why these are profitable business with free cash flow that basically takes out many of these weak stocks and focus on the stronger stocks. So with that, let's jump in here and look at these beaten down profitable growth companies and add few of them to our portfolio and take advantage of this bargain basement price here. So with that, let's jump in. Look here, we got list of stocks here. Keep watching here. All the quarter over quarter sales growth here is positive. That tells you these companies are growing. These are growth companies. And I also made sure a 1 year sales growth is also positive. That way these are good companies and growth companies. And look at the sales. They got nice sales. These are really making great sales here. All the sales numbers are more than 1 billion, as you can see here. These are good companies. And from a gross margin and net margin perspective, companies are doing very well. And look at the net margin. All these companies have got net margin positive. That tells you end of the day, all these companies are making money. They're not money losers. And we got here quick ratio that tells you does the company got enough short-term capital to take care of short-term obligations or liquid financial position to take care of financial obligations. This tells you they do have enough money. All these companies got a quick ratio more than one. That tells you they can handily meet short-term financial obligations with the most liquid assets they have on hand. And from a RSI perspective, relative strength index perspective, look, all these companies have got RSI or relative strength index below 45. That tells you all these stocks are sold off here. And then we got here performance all the way from 1 day to 5 year. Look, on a 5 year basis, all these companies have got nice performance here. That tells you long-term story is still intact. And in the short run, these are facing some short-term headwind here. Companies are really struggling a little bit in the short term because of all the geopolitical tensions and the Wall Street, the interest rate hike type scenarios. That's why they're doing great in the long term, but having some trouble in the short term. That's what we want to focus on. Great companies with a great story in the long term, but short term there is some temporary issues. That's why RSI is low. That's when you got to look at the entry point and buy these companies slowly and look from a cash perspective and a free cash flow perspective. All these companies got a lot of cash and free cash flow is positive. That tells you these companies generate money. These are not money losers. So that's a great story. Typically, I love to invest in stocks, companies with a nice free cash flow positive. All these companies have got free cash flow positive here. Altman Z score perspective, all these companies have got nice Altman Z score that tells you financially stable, and Piotrowski F score that tells you are the books consistently good. The answer is yes. All these companies have got Piotrowski F score above 5. That tells you these are above average for most part. compared to industry, and its book is great compared to other companies. So on average, the books are doing well. Financially, these companies are improving, and the Piotrowski F score, higher the better. All these companies got a score more than 5. And then finally we got the industry benchmark here. All these companies are doing great against the respective industry here, so that tells these are good companies. We should focus on these, and I will point few companies here. All these are good companies, but as you scan through here, one of my favorite is a Trade Desk. Look at Trade Desk here. It's a $53 stock after the stock split while ago, and look, stock is beaten down here, 34% drop in 10 days, and it's trying to improve as we speak. Yesterday it went up 2.7%, and look, they got nice about $1 billion cash, 959 million dollar cash, free cash flow positive, nice Altman Z score, and nice Piotrowski F score. At this time, I think it's a great buy here. We should slowly start buying Trade Desk. They will do great. And then we got few more here. Look, we got PayPal. PayPal had been going down for a while, as many of you have noted here. And look, right now it's slowly trying to improve here. I think at this time, PayPal could be okay to slowly start buying. Given it's got nice net margin, it's a company is making money here. And look, they've done great in last 5 years, and near term it's struggling. Look at the nice cash here, $9.5 billion cash on balance sheet, and nice free cash flow positive company here. And as you see here, we got a few more here. Micron also came down nicely, and at this time it could be okay to slowly start buying some Micron here. It's also doing great. Great $9.5 billion cash here. Nice free cash flow positive, $3.8 billion free cash flow here. And we got a few more here with the huge drop-offs here. We got, as you can see here, we got Etsy. Etsy used to do great in 2020. Now it's a huge drop-off here, 21% off in last 10 days. You could take a look at Etsy also here and slowly start buying and go from there. And we got a few more here. One of my favorite is Adobe. Adobe is a great creative cloud company, as many of you know. Shantanu Narayan is the CEO. He says he's doing great. I think at this time, this company is completely beaten down. Look at the price, 421. This used to be very high flyer, much above $500, $600, beaten down drastically. At these levels here, Adobe is a great stock here. It's a good recovery play. Look, it's doing great compared to industry here. Profitability is 1. It's the highest rank in the industry. Growth perspective is also rank 1, which is a great one here. And for the folks who love medical devices, there's a quality medical device company, Intuitive Surgical. I love this company. Look, it's beaten down at these levels here. Look at the RSI here. RSI is down here, 41. I would be a buyer of this great company, ISRG. You could also look at other medical device companies like Edward Life Sciences. This is also great one here. And we got few more here. Look, we got Himax. This company has been struggling off late, as many of you noted down here. I would probably, if you have a long-term horizon, you could buy, but short-term, this is struggling a little bit here with the high short ratio. Tells you short sellers are breathing down its neck, along with the AEO here. Same story. These companies can, create a short squeeze and go higher as you go forward. All right, let's look at few more and go from there. Look, it's a continuation here. Let's quickly move this a little bit. All right, so let's look at few more companies here and go from there. Look, we got EPAM systems. We've been talking about it for a while here. I think it's a great buy at these levels here. Stock has gone up slightly in last 10 days, but even up here, it's a great buy. Long-term great story here. Look, compared to industry, this is a solid company. Profitability is rank 1 here. Growth is rank 1. It's a great one to buy here. And then we got a few more here. I love Black Knight here. It's a great company. They do a lot of this accounting type software here. You could buy this company also. Off late, it's a big time drop off, as you can see here. And it's a profitable company with the 14% net margin, as you see here. And I love Synopsys. It's a great stock to buy here. Look, it's dropped off late, pulled back nicely, and RSI is 41. Great one to buy here. And we've got a few more here. Ciena, one of my favorite companies here. They do optical networking, as many of you might be knowing. It's a great one to buy. This used to be a darling in Wall Street back in 2000. Stock is doing pretty okay here. Look, RSI is 35. Stock is beaten down. This is also a good one to buy. Net margin positive, 13% here. It's a profitable company. And as you see here, we got Align Technologies. It's a big time dental, type company here. They do a lot of good, dental type work here. Uh, Stock is beaten down. Look, 10-day 22% off, on a 1-year basis 27% off. Long-term story still intact. And look at the industry benchmark here, doing great compared to industry from a profitability and a growth perspective. I think it is a solid buy here. Stock is dropped off, trying to rebound in 1 day. It's a good one to pick up and buy at these levels here. And then we got Crocs. Crocs is again a great company. I love Crocs. Stock is beaten down big time here. A nice benchmark against the industry here. At this time, it's okay to slowly start buying some Crocs. Look, it's a kind of rebound in 1 day, even though it's a big time down. I also like Teradyne. It's a good semiconductor testing company. Stock is dropped off, as you can see here. You could buy this great company at these levels here. And we got a few more, as you can see here. EXPI used to be a great company a while ago. It's into real estate. Look, it's down big time here. If you have a longer term horizon, you could buy some ESPI. Look, short sellers are breathing its neck here. That's why high short ratio. Stock is trying to go up in 1 day, trying to squeeze those short sellers. It's a good one to buy for the long term. And we've got a few more companies, as you can see here. I love KLA. It's a great semiconductor company. You could also buy ZTS as well as Lam Research, both great companies. You could take advantage and buy at these levels here. So with that, thank you very much. Happy investing and trading. Please subscribe.